Welcome to the podcast. I'm Eric Salzman, joined by Richie Bennett and Kevin Doherty. How are we, fellas?
Uh,
All right.
Hey guys,
Yeah,
so barely
this is
surviving.
yes, this is an emergency crypto podcast. So without further ado, because everybody wants to know what the hell's going on with Bitcoin. I got so many
Yeah.
questions this week from friends, family, everything. So Kevin, take it away.
Well, the thing that's been getting, I think, the most attention, rightly so, is that our old friend Michael Saylor in Strategy, which is just a brief recap. It's the Bitcoin Treasury Company. It's the biggest holder of Bitcoin in the market. Collectively, it holds as much Bitcoin as all of the Bitcoin ETFs combined. It's the market monster, and it's done some really stupid things in the last few months. Not even questionable, but just outright head scratchers, and so it's caused a you could argue that a big part of the reason that Bitcoin has had such a rough ride the last few weeks is because of the revelations of what's going on here. So I'll try and briefly explain it. We've talked about MicroStrategy before, and a year ago, it really didn't have that much debt obligations. Now, what it had done is it issued convertible bonds in order to raise cash and buy Bitcoin with it and lever up that way. But these bonds had like 0% coupon payments or 1%. So the financing obligation that the company had was basically nothing. So they changed strategy about a year ago, and they started issuing a lot of preferred securities. So technically, there's a oh God, the technical term. It's a cumulative preferred shares is what they issued, and in the last year, they've issued about 15 billion US dollars worth of them. They have $15.5 billion outstanding in these now. And they've been issuing these and using the proceeds to buy Bitcoin. Um, Now, the way these function is they pay a monthly dividend, and the dividend is variable based on some market pricing of the instruments. And I should say the ticker for them, you can buy these, in your brokerage account. It's STRC is the biggest facility. It's called Stretch. And so that one, it's about $10.5 billion outstanding of Stretch.
It's called Stretch.
Stretch. Yeah.
That's
That
comforting.
inspires confidence, doesn't
Right.
it? And so it pays a dividend between 10 and an 11.5%. And right now, it's due to pay an 11.5%. That's annualized, but they have to pay it monthly. So now there is an ongoing obligation to that where they have to pay out cash. And so on based on their current that 11.5% and $15.5 billion worth of these outstanding, it's about $1.7 billion a year in dividends that they need to pay out on these prefs.
Now, Kevin, just
Uh,
to interrupt you for 1 second. So,
uh,
so now they're paying a high. Now they're actually paying interest or a dividend on the preferreds.
yeah.
So, what on the asset side of the balance sheet generates enough income to meet that debt service?
So basically, the stated strategy has been we're going to continue to issue new STRC, new stretch, to pay the ongoing obligations of the currently existing stretch.
Wait. There was a guy named Madoff that did that not too long ago,
Yeah,
right?
So, I mean, it's pure financial engineering. And in a bull market, it works because who wouldn't want an 11% dividend? And so not to get sidetracked on this, but he really did promote this in ways that are very questionable, calling it a savings account and saying, why would you, leave your money in a bank when you could have earn these returns that are just as safe? So, there are lawyers who I'm sure are circling this right now. And
It gives me an
so
idea.
so that yeah, so that's the structure. Now, a couple of months ago in February, um, the company, so MicroStrategy, issued $2 billion worth of a new convert series that matures, I think, in 2032. So it's got some time for it. And the stated use of funds for that, buy more Bitcoin, and also to have cash on hand to pay out these dividends for these pref shares. Well, then in May, on May 14th, the company announced that actually they were going to do a buyback of a convert that they had previously issued that's coming due in 2029. So no urgency on this. It's a zero coupon convert. So there are no cash flow reasons that they should buy this thing back. They were able to buy it back at a discount because it's a zero coupon convert, and the strike price on it, I wrote this, it was something like 600 and where is it? $672 was the convert price
on
on this on
strategy.
this bond on strategy, and strategy today is trading at 120, about the around the time that they exercised this buyback of these converts. It was trading higher, but it was still only around 200. So the chance of these converts ever converting was effectively zero. And so they were able to get a discount from par of about 8%. So they bought back $1.5 billion in face value of 2029 converts at $1.38 billion is what they paid. So, if you're a normal company, maybe not such a bad thing to do. But now their cash on hand only supports about 4 months worth of paying these stretch dividends. And so the question is, wait a minute, you suddenly put yourself in a situation and where liquidity may get really tight here.
Mhm.
And, with the market being what it is, you can't really rely on being able to continue to issue more and more of these to pay off the coupons that are due.
Right.
And
Well, like that would be I would imagine that was the most valuable thing on the liability side of the balance sheet, right? That it's like when we talked the other day. Remember we talked a few episodes ago about how, if I could issue a 100-year bond at, at these rates back in 2020, Rich said it, like do it all day long. Isn't
yeah,
wasn't this kind of like, the guy who, you have a 3% mortgage and then said, you know what, let's refinance into a 6% mortgage.
it makes no sense. It makes no sense at all. And it's in the situation you're describing, like I have a 3% mortgage and I also have, $50,000 in credit card debt that I'm paying 19% on. I just got $50,000 in an inheritance. I'm going to use it to pay down my mortgage. It's like, well, what are you kidding me? You should be paying off your credit cards with that. So when the market heard this, there was universal, like just, at best, people questioning, like, wait, what's going on here? What am I missing? And so that was bad. And now this week, the market's kind of finally woken up to, hey, this might be a real problem. And so the stretch, normally it trades right around $100. That's par value. And this week, think of it like a money market fund. It broke the buck.
Hmm.
And last few days, it really fell down. Yesterday, Friday, it traded as low as $90 and closed the day at 93.40. And so the problem here is that they can't issue any more of this stuff unless it's trading at par,
Right.
because no one's going to buy it. We go in the market and buy it at 93 rather than buy a new issue at 100.
Richie, should you call Boaz Weinstein on this?
He's got a 75 bit. Hold that.
Right.
But
Um,
and so then earlier this week, it was also on Tuesday, it was announced that MicroStrategy had actually sold 32 Bitcoin worth about $2.5 million in the
Right.
previous
Kevin,
week.
do you think that it was a test just to see
Yeah,
what?
it had to be, right? Why would you sell that little?
Yeah, it doesn't make any sense.
And then it was like the catalyst for the whole thing to crush, right? Like
That's right.
bang. And so
And
now, if he was testing, right? Guess what, pal? Your test. I don't know what he thought was going to happen, whether that's a failure or a pass, but everything's lower. So,
everything's lower.
and I think too, with all these problems, right? I think that the sharks have come around around the bay, and they smell and they know that if all this stuff that you just said, 4 months left of cash flow, he's going to be selling his Bitcoin more.
Right.
And that's
right.
what everybody piles in first. And now his price is lower. Or he may have already done it and it hasn't come out in public yet. But he was the guy too, right? That said, don't
Never
ever
sell
Bitcoin, right? Ever.
That's right.
Right.
Yeah. Yeah.
So when he sold like 2.5 million, I was like, what is he buying a car? Like, a yacht? Like, what's he doing? Like 50 million. I mean, maybe he thought if he did do 50 million at a whack, that the thing would go to 10,000,
It does not make sense at all.
No, you gotta also frame this that Saylor has completely imploded before with his venture before this, which was, and I lived in Great Falls, Virginia, and he was I mean, during the dot-com boom, he was the guy, and he was throwing these lavish parties, and I can't even remember what his company did. It was a dot-com kind of coding or something. I can't remember what it was, but it blew up spectacular. It was one of the main blow-ups of the dot-com disaster. And so he's done this before.
Yeah, he has. And so piled on top of that, there's been big selling in the Bitcoin ETFs. There were negative outflows for 13 straight days, which was a record. And then that was through Wednesday, June 2nd, 3rd. And then Thursday, there was slight inflows. It was only like $3 million. And then Friday, big outflows again, $340 million of outflows on Friday. So that was Bitcoin, that was MicroStrategy. While all this is happening, there was another thing that the one of the, I'd say, two best performing tokens this year has been something called Zcash. And Zcash was designed basically to be exactly like Bitcoin, but to have more privacy. And so it's not worth going into all the technical details, but you can choose to do a transaction with Zcash that shields your address. And basically, some argue that this is the original idea of Bitcoin, to be able to transact anonymously. And as Bitcoin is become corporate and institutionalized, it's not the real Bitcoin anymore. And Zcash is actually for the old school crypto people that they're shifting into Zcash because it adheres to the original ideals of Bitcoin. And so over the last year, a number of very prominent people in the crypto space have publicly come out and said, look, we're shifting into Zcash. We're big believers in that. Well, one of the security researchers in the Zcash company and its ecosystem used I think it was Claude. I'm not 100% sure, but used one of these AI programs to do a security audit on the Zcash code base and discovered that there was a flaw in it that could allow people to create Zcash out of basically thin air. And so they fixed it, they patched it quietly, but then announced, hey, this is what we found. And when they announced this yesterday, Zcash fell 40% like that.
Oh, Jesus. See, because I was going to ask, just before you said that, I was right about to say, there's a lot of news around this strategy thing.
Yeah.
And it obviously affects Bitcoin, but all the cryptos were going down. And I was going to say, like, is it time to buy something else, like Ethereum or something? It seems to be a Bitcoin-centric problem. But then when you have stuff like this, now that doesn't make anybody happy, right?
That's right. And this is very reminiscent of previous market crashes. And I dare to say market bottoms in crypto because that implies that people should buy right now. There are a lot of technical indicators that are reminiscent of previous market bottoms. So, you know, it, it's the classic story, right? Buy at the sound of cannon, sell at the sound of trumpets, or vice versa, whichever it is. But so look, crypto's been the redheaded stepchild of the market since October. Everything else has been going up, and crypto has just been getting crushed. So how much more really is there to go down? And look, if it turns out they're still doing the full audit of everything that happened in Zcash. There are fears that perhaps somebody, maybe the North Koreans, knew about this flaw and they did create, uh, phantom Zcoin. That is, or is it, sorry, Zcash. The report on that is due to come out in the next week or so. So, if that doesn't happen, the Zcash will probably recover somewhat. But
What's the
yeah, it's
size?
just bad. Sorry.
Okay, what's the size when we're talking about Zcash? Like how much?
It's about a $10 billion protocol. So it lost, $4 billion in space of an hour. Um, so very, very difficult times in crypto land. We also have the Clarity Act, which we've discussed. There it's still stuck in the Senate, and I get my money is on this is not going to pass. It has to pass before the August recess because when they come back in September, nothing happens, right? So it would take something extraordinary for this legislation to pass through before the November elections. So there's just nothing positive in crypto land. And then finally, I would point out two other things that do have a big impact on the crypto market. Remember, crypto is global, and the I'd say that the two biggest groups that are active in the market are Americans and Chinese. Now, China's liquidity has been actually arguably contracting over the last few months. There's a report that's very interesting that showed that the PBOC liquidity injections and overall money market volumes have gone negative in April and May. And so add to that the fact that the Chinese economy is really struggling as well. In the first 4 months of the year, their fixed asset investment was minus 1.6% year over year. While this is exploding higher in the US because of the data center construction, China is actually shrinking. Retail sales in China were only up 0.2% in April, which was the lowest increase since post-COVID times. So China is really struggling, and the market expectation continues to be in crypto land that, again, because there's a lot of focus on China amongst crypto people, that the Chinese authorities are going to have to relent and inject liquidity into their market because they just don't have a choice, but they really seem reluctant to do so. And so I think that certainly has some impact on the crypto market. And then finally, the other bit is the Korean market. If you look at Korean equities on the back of the semiconductor explosion in the West, their stock market is on absolute fire. It's more than doubled this year. And Korean retail investors are, I'd say, behind American and Chinese investors. The next biggest cohort globally are Korean investors in the cryptocurrency market. Well, they're all playing around in their equity market. So that money that used to be, a support for crypto has not been there this year. So it's really just a kind of a perfect storm.
What's kind of scary to me, because I think Rich, you pointed out a while ago with the Korean market, isn't it like two companies are about 40% of the market cap of the Kospi's, the Korean exchange.
Yeah.
So it's one thing to say, well, okay, all these guys that were investing in crypto have moved over to the stock market, to artificial intelligence, to chips, or whatever it is. And okay, well, when maybe there's a time that they move back. But if they move back after taking a 50% drawdown because the Korean stock exchange blows up, well, they're not going to, that's 50% less than you might have thought is going to go back into crypto, back into Bitcoin.
Yeah.
Couple other points too. I saw something today. So Friday, so this is June 5th, we're on, right? 6th, June 6th. So June
Yeah.
5th, Friday, there was this crash in NASDAQ, worst day in a year for the NASDAQ, 4% down, right? All the chip stocks got hit, everything. So somebody made a good point. They said, you know, after a big Friday down day, everybody looks at the futures markets on Sunday night, right, when they open to see how's it going to open, blah, blah, blah. And this one guy said, yeah, I wouldn't worry so much about the S&P futures or the NASDAQ futures. Let's see how Korea does Sunday night. Like, so that's kind of like leading it because of Samsung and SY Hynix or whatever it is.
Yeah.
And the other point was, this is not Kevin Doherty's emerging markets anymore. Meaning, like, you used to go into emerging markets because you liked a diversified pool, right? Like most of the time in these emerging markets, you had like a lot of commodity stuff, right? That drove everything. And if you had some of those stocks when things weren't going so great in the US, it might have worked, so that ticker EEM is huge, right? That's the emerging markets ETF, the biggest one. But now everybody's like, that's not even right because it's really going up because
It's a tech index now.
Yeah. It's a tech index. So there are others without tech so much, or I think there's also one without like Korea, and another ETF. So people were kind of pushing that, saying, maybe you want to diversify for real this time.
Are a lot of hedge funds involved in Korea?
I think they had gotten for sure this year,
Yeah.
to
See,
drive it
again,
that much.
they usually borrow in yen, right? They usually
Right.
do
The old double whammy.
yeah, and that trade may be over. Well, I noticed that the yen actually broke 160,
Yeah.
which I thought was like the red line that the MOF Ministry of Finance would come in and start supporting the yen, but nothing yet.
Mm.
I'll leave one final thing with crypto. So, Bitcoin has never in its entire existence traded below its 300-week moving average. So, through
Never.
every bear market it's had, never traded below that figure. That figure is $53,000 today. So, that is a very interesting kind of line in the sand to watch.
Yeah.
And
I
it's
saw
at
somebody, I don't know.
60,500 right now.
Yeah, I don't know if they were referring to that, but I saw another thing too that said if it gets into the mid 50s and falls, next stop like 30,000, right? Like just,
Yeah.
and I'm like,
Yeah.
whoa.
Now,
Next
the
stop is
catalyst.
I get a job at Walmart as a greeter. That's the next stop. So let's hope
No,
we
if
don't
the,
stop
the
there.
main catalyst though is that the biggest whale turns out to be it's in weak hands right now, right? Because this guy levered himself up and he's basically put himself in a box, right?
Yeah.
He at this point he needs to get it down on his knees and pray that something bails him out of this because right now it looks like we're screwed. But when you have all of the guys that we're handing it off to the sovereign wealth funds, the endowment funds, like in other words, those guys probably have a bottom, right? Where they're like, all right, it's time to start coming in and buying up Bitcoin. So, I mean, it sounds like if that's the main, like if you told me that what's going on in Zcash, well, that's also going on in Bitcoin. Like like Bitcoin could be contaminated and the whole value thing goes out the window. If it's really, I know this is very painful, but if it's really this big whale having to sell lots and lots and lots of Bitcoin, I mean, it sounds like we could be Boaz Weinstein too, and just kind of wait for this thing to get clobbered. It'll come back because if that's the main reason,
Yeah.
then okay, there's still value there, and it's just this idiot got himself into a bind, and now he's going to have to get out of this bind by crushing the market.
Yeah, you see that all the time, right? Like these distressed guys sit around and wait for stuff like this, right? So I'm sure there are people like, all right, let's check that out. Like that thing's real. Why is it trading now at 60 when 6 months ago, it was trading at 120. Oh, this guy. Oh, okay. Yeah. So get him out of the way and we'll buy it. And
Mhm.
now we're strong hands holding this and let's watch it go up. And that's been going on forever, right? And any market.
Sounds like the monkey business. We got to start a fund.
There we go.
I wish we knew somebody who was a real great expert in crypto that could trade it. Oh, wait,
We have that.
we have that.
It's a good thing there hasn't been a fund operating in the last this year. It would have been rough.
All right. Let's move on to another just disturbing topic. Private credit back in the news. I don't know if you guys saw. Blackstone had to pull the gates down on their big publicly traded BCred. Oh no, I'm
Yeah.
sorry. BCred is the private. They got, I think it's a $45 billion fund, and they got 4.5 billion of redemption requests, 10%. So they put the gate down. They basically said you can only take out five, but it's on. It's happening. And I mean, honestly, if this, I think we've gone off it's gotten off the main topic just because of the war going on in Iran and everything like that. But this thing is starting to implode. And what's funny, or it's funny in a dark way, I always like to look at things from a dark comedy perspective, is this article actually came out in the Wall Street Journal, and it was called "The Anything Goes Era in Private Credit Lending is Coming to an End." So get that. Like, we've lent $1.8 trillion of this crap out there. And oh, by the way, Jamie Dimon and Wells Fargo, they've all lent money to us so we can continue to do this. And now, well, you know what, maybe we need to tighten up those lending standards, you know? And you're reading this and you're like, what the heck is going on? Like, I mean, like, you're seeing this freaking ready to blow up. And I just think that honestly, you remember, Richie, you took the under and I said, how many people in the world know the whole private pension, public pension, and insurance companies involvement? And he said maybe he took the under. He said maybe it was 50.
Yeah, exactly.
Like,
And it's still true. And we keep saying this. We keep saying this every week when we talk about this group of people running this private credit thing. This is all while every day, all day until Friday, every day, all day, we've gotten all-time highs in the equity markets, right? Like, so if you can't, if you have investors that are scared of what you have in your fund while markets are flying higher, take a few more days like Friday back to back, and you'll have 100% redemption request. Then it's all over, right? Like, all right, put me down. Oh, the gates are down for 5% only? Yeah, put me down for the next 20 months. Just give me my money every month. You don't have to call me. You don't have to, just send a check. And then it's all over. You know?
And again, like, you know, Richie, I know you and Kevin, you guys talked about, you know, all right, well, you know, yeah, Blackstone, I mean, whatever. I mean, if they drop a few billion, they're so big and they've got so many different things going on. Well, how about if someone sues you for 50 billion? Like, how about that? You know, and I mean,
that's what it's trading like. That's what a lot of them are trading like.
Yeah,
right?
and
So
again,
that was the first. It was them saying that too. Like it was Larry Fink and the boss Schwartzman. All the big guys were like, yeah, but that's like 2% of our business. You know, we're concerned, but it's, you know, it's a pimple basically.
Right.
And then all of a sudden, you know, like you said,
you remember when I wrote that piece in the racket, the Bermuda Triangle on your pension fund. I mean, Lloyd Blankfein. Now, granted, Lloyd is now on the beach and he's relaxing and happy, so he could say such things. But he was like, "Look, for sophisticated institutional investors, which I think actually sophisticated institutional investors don't always that they could be mutually exclusive." But he basically said, when you start putting this stuff in insurance companies and retail, and he goes, that's no bueno. No, you're gonna. And he goes, and he was basically saying, you guys want to keep running that nice business of yours, right? Well, if you vaporize a few pension funds and a few life insurance companies and a bunch of retail investors, guess what? The U.S. government may have a very different opinion on your business. It's just incredible. But here's the thing. So I'm reading this article. I'm laughing. I'm like, it's basically saying everything that we've been saying for the last, whenever the hell we started this thing. It was like, if you give, this is like back in Japan. You remember in Japan, commercial real estate lending in the 80s that led to the banks all to get vaporized or blow up.
Mm-hmm.
It was literally, look, here's here's a billion yen, whatever it is. Go out and lend this money and don't come back until it's all gone, right? Like, and that's what they did. And
Mhm.
that's what happened in subprime. We'd sit there and the loan brokers would get the sheets and they'd be, okay, Bear and Lehman and Credit Suisse all want that option arm stuff. So get out there and give the money away. We give the money away, paper it up and ship it in. It's the same damn thing. I mean, it's like there's no way. And this article finally, so I want to read you a couple of quotes. Private credit is also placing more restrictions on private equity firms, which heavily rely on their loans to buy companies. Those restrictions include limiting the amount of additional debt private equity firms can place on the underlying company and their ability to sell or borrow against its equipment or other tangible assets. Now, you want to talk about Madoff and the Ponzi scheme. They started doing this last year. I remember I read this, I'm like, doesn't that sound like a Ponzi scheme? And I asked my buddy, one of my buddies is really big in corporate credit. And he's like, yeah. And what it was they started borrowing against the assets that they have as collateral in their lending. I don't even know how you do that, but they did it. And banks people lent to them. So industry executives also say they aren't permitting as many adjustments to financial metrics, such as removing one-time or discretionary expenses that can make companies look more creditworthy than they actually are. They'll stop doing that. That's a shift from recent years when private credit was under pressure to put capital to work quickly, and its buyout cousins often dictated the terms of the loans. That environment was fueled by funds both institutional and retail channels. So it's everything we've been saying. Like these guys, billions of dollars were flowing in. Private credit was the thing. You're not going to turn that away because you can make a boatload of money in fees and doing all your thing and build another building somewhere in Manhattan or wherever the hell it is. And like how did no one see this? Like literally, I remember the first day I found out, wait a minute, like the private credit guy can lend to the portfolio company of the private equity guy and they could both be in the same firm and no problems there. Like there's no, I mean, forget about the fact that we've been talking about it. How do you underwrite these? Even if this is totally legit, how can you underwrite all these freaking loans and do it well? You can't. But that's not even considering this. That I cannot tell you how many smart people I respect have said, well, yeah, but the loans, most of the loans are probably good. Really? Like, do you even know what the loans are? I mean, it's like, how do you know that?
On a much smaller scale, of course, I've lived this, right? At one point in my career when we were CLO managers, collateralized loan obligation managers, and we were required, it's the same thing. So we have a ramp up period to get the loans into the box, and then we sell the underlying bonds. We make it into, we put it in the sausage factory, and poof, here comes the goods. And I always got along with the higher ups when I was there, like the big guys. But the only time they would like really bitch is like, how come you're going so slow, Richie? You're going really slow, like if we got this done faster, we could get on to the next one. And I'd be like, yeah, but there'll be no more if I stuff it. I know what the guys down the block are doing. They're selling their grandmother's, ice in Alaska, right? Like that's they don't care. I said, I kind of care, but they'd win, they'd win. Like I wanted to work, right? So it was kind of like, you like your job? Yeah, I do. Actually, all right, I'll buy that shitty bond and put it in the box. But there was definitely like every day, and like sometimes I'd get a phone call from like Europe because I was working for the Dutch bank,
right?
And we really need to ramp this up because we would. That was another thing. Talk about balance sheets and lending. A lot of times, guys would our big advantage. We were a AAA bank, and we would actually house the assets. So they would allocate balance sheet to me to house these things before we put it into the sausage factory, right?
Warehouse.
So for us to borrow, like I was tight with the guys who issued our CP or our money market stuff, and they would just, yeah, Rich, you're in, you're done. LIBOR minus whatever. And, so they've allocated this expecting to make a lot of money because the carry on the trades, meaning the coupons that I'm buying are huge. We're borrowing it better than anybody. And I'm, in their minds, some days, plodding along. Come on, Richie, come on. If you don't need that balance sheet, we can put it somewhere else. Like, do you want that? No. But and I'm sure with these guys on a much bigger scale, right? They're talking about billions, right? And remember, they're like right before the pandemic, and then the pandemic happens. But there was a lot of complaining that they couldn't find places to put the money, right? And our old retired fellow in Omaha, right? He didn't flinch, right? People kept saying to him, Warren Buffett, you have, $480 billion, dude. What are you doing? And he'd give him the hand, right? Now his little second in command now, the big guy now, he's starting to get involved, right? So somebody got to him, because he's not Warren Buffett. Somebody on that board gave him the same conversation that I would get. Bro, we got all this dough. It's earning nothing or practically nothing. Make some deals. And so he did, right? He's done 2 now. He bought Taylor Homes, and he gave $10 billion to Google on their equity raise. The first time that
they raised $80 billion, right?
$85 billion they raised. The first time they raised equity in 20 years, something like that. So that's another danger, Will Robinson.
And again, like I just want to repeat this again because it has to sink in, right? It has to sink in. Private pensions they don't want to manage this thing anymore, right? So they are doing pension risk transfers, and they're sending the pension over to Apollo and their wholly owned company, Athene, the largest annuity provider on the planet. So they're moving this $10 billion private pension over to Athene. And then Athene is taking the money that Lockheed gives them to take the liability, and they are moving it offshore. So now I think it is now outside of the auspices of it's no longer insured by I think it's called the Pension Benefit Guaranteed Fund, PBGC. Once it goes over to Bermuda, that's gone, right? There's no insurance for this. And then they're filling up the private pension with all this great stuff that they've been running around. That's one of the reasons. That's one of the reasons why guys are running around billions of dollars, because this is where it's coming from, right? They got to put, and you're damn right, they got to put that money to work, and they're getting the same calls probably that Richie was getting, right? What are you doing? Like, get to work on this. And so they basically are taking over huge chunks of corporate pensions. And you're like, all right, well, that's what is that, a $10 billion problem? 50, it's a big problem. But then, like we said, is that the public pensions, the big CalPERS, all these guys, they're getting involved with Apollo and Athene. They're putting up equity for these pension risk transfers. So, and what are the pension risk transfers now invested in? They're invested in this crap. So it's this freaking doom loop that has been created. And like, I feel like I'm doing George Carlin, The American Dream. Nobody cares, everybody just accepts it. And nobody understands this stuff. And it's going to happen. It almost has to happen. It's just sitting there. And I mean, like Rich, like you said, right now, hey, we just added 170,000 jobs on Friday, and the economy's still doing pretty good. And this is happening now with the stock market going through the roof, and everybody wants risk assets, and the economy is looking like it's not still hanging in there. Oh, well, all right, this is happening now. What happens eventually? You can't have an economic expansion forever, right? I mean, eventually there has to be at least some sort of recession, and it could be more than a mild recession. What happens then?
Okay. So all you viewers out there, where you're not going to see this on any financial show other than this one that I can tell, and you might want to tell all your pals to tune in, because you're going to get stuff like this from us that you're not going to see on the regular. Apple stock is up $2 today. shows, right?
And
Pick of
with
the
that,
day, those things.
with that, we got a little horse race coming up today, right, Richie?
We do the Belmont Stakes. I have my shirt on. I don't know if you can see it, but it's got a lot of horses on it. But one final point before the horse pick. B of A strategists, I like stuff like this. B of A strategists pointed out when the unemployment rate is lower than the CPI, it always spells doom. Almost always. They showed it each. I'll get the numbers for next time. The years that it happened, it's like, oh my God. Like it last happened in 21 when we had a downturn. 08, it happened. So that would seem to be counterintuitive, right? Like the unemployment rate is low. That means the economy is good. But when that CPI is also high with a low unemployment, that means we're revving up. It's heated, right? There's too much hot, which means no shot at a cut in rates, none. So they're predicting the CPI, the market experts are saying it's going to be like 4.2 or 4.3 on Wednesday and that's where the unemployment rate is. So, watch out, right? Because like that's like the trigger because Trump can yell and scream all he wants. If we're like this, there's no way. You'll see like the chances for a rate hike are going to grow. Hike, not cut. Hike. They're not even going to talk about cuts anymore. It's gone.
Yeah, if you look at the probabilities,
another number like this, like if that CPI is hot this week, there's going to be problems. So yes, let's turn to something better. The Belmont Stakes, and what were we talking about before? Of course, emerging markets, right? And there's that horse again. Emerging market is in race today. He was the one I liked in the Derby, but he got like tangled up. But I looked again. He had only run 2 races before the Derby. That's no bueno. Like that's hard, right? You're a little kid basically, and you got all these 20 horses around you. And I think what happened is he bucked the guy in front of him in one of those turns, and he got spooked. He recovered a little bit, but it was too late. But today, there's only 9 horses, and they're running at beautiful Saratoga for the last time because Belmont Park is being refurbished and will be ready on September 18th this year, I hear, which is great. So the Belmont Stakes will move back to Belmont Park in New York City, or Elmont, New York, Long Island, in 2027. But I like today, emerging market to win. And then I'm going to put, that's the number 8 horse. And I'm going to put an exacta, 8-4. 4 is Renegade, who's going to probably be the favorite. He was the one who got caught by Golden Tempo right at the end of the Derby. And I think he's been training really well. And so has Emerging Market. Emerging Market had a workout the other day, last week, the last one before this race. 80 horses ran that same time trial in the morning at Saratoga. He had his second fastest time out of 80. So he's ready. So
8-4.
8-4. And 8.
So what would that pay? What would, if that hits?
8 6 to 1 in the morning right now. That could change. Renegade's probably going to be 2 or 3 to 1. But that exacta would probably pay close to $25 for $1. Maybe more. So
Yeah, well, we all have some money to make up after Friday, so
that's right.
here you go. Go big. All right, guys, great stuff.
And a big week in the markets is SpaceX IPO.
Oh yeah, we didn't even talk about that. So maybe we can have another emergency meeting next week to talk about SpaceX.
SpaceX. Yeah, I think Morgan Stanley I can't remember how many trillions of dollars it said they were gonna be making in revenue by 2040 or something.
Yeah, it's like 4 trillion or something. I'm like, okay, that's good.
All right, good stuff. See you next week.
All right.
See you.